Yo, what's up, YouTube fam? It's your boy, Stevenson Lindor, back again with another video. Before I get started, as always, like, share, comment below, but most importantly, subscribe, tell a friend to tell a friend, tell a friend. All right. As always, if you want access to the free Telegram community chat, Discord, Telegram link is in the description box below. And if you want to hit me up for the private community, you can shoot me an email and holler at me there. So today I'm going to try to drop, I'm not going to try, I'm going to because I missed last week. So I'm going to drop two videos. I'm going to drop one video tonight, tomorrow, and then I'm going to drop another video probably Friday. All right, give you back-to-back content because I promise you guys one video a week, and I'm going to stick to that. If I miss a week, you'll get double the following week. So we're going to jump into it. Today, we're going to go over utilizing the Fibonacci tool correctly. All right. A lot of times, guys, you'll see myself and other educators on YouTube, going over or re-going over information that was taught in the past, but sometimes we need a refresher as our mind advance and develops and gets better, especially with trading. It's great to go back and review stuff that you learned in the past, and you see how easy and simple it is when you integrate it with the information that you know now, right? So the Fibonacci tool is actually one of my favorite outside of the MACD. As you guys know, it's one of my favorite tools to use. For those who don't know, the Fibonacci tool is a trading tool, right? It's basically based on a set of technical analysis sequence derived from mathematics. I love math. For those who don't worry. You're not required to add or multiply or subtract anything, but traders use it to identify potential support, resistance, supply and demand, and extension movement. So, what you really want to use it for is for pullbacks, retracements. All right. It identifies those pullbacks at certain levels. So this is the Fibonacci tool right here. And I'm going to just place it right over here just to give you guys an idea. And as you can see, you see all the levels. It starts at 23, then the 38, the 50, 618, 786, 886, 100, and then you have your extension fib levels. All right. These are the standard fib levels of the Fibonacci tool. Now, me personally, I don't like the 23 and the 38, so I get rid of that. Me personally. And it's just a matter of preference. You'll see certain traders, they only use certain fib extensions, right? Just preference, right? Just preference. I believe, me personally, I like to rely on the 50 and 618. Those are my favorite fib levels. The 50%, 618, which is also known as the golden ratio. Those are my sweet spots. And all you're doing is you're pretty much trading off of those levels. So again, if this would be considered a support level, demand level, I would buy here and I would trade into the next fib extension level, right? To that previous high or low, depending on the setup. But this is how I really utilize it. But before I tell you guys how I utilize it, I want to use real live examples. So last week, I didn't get to drop a lot of trade setups in the Telegram, but I will this week. As many of you guys know, I'm an educator for IOVIA, formerly known as I Am Academy, right? And again, guys, being a part of the community is really, really strong. Ask Gloria and Crystal, they loving it. So I caught GA and GN buy to start the week off, as you can see, February 17th. So we're going to bring those two up. And I'm going to show you how exactly to implement the fib. And then the prior week, we caught a great buy setup on gold. I want to look at gold and also USD Swiss franc. So multiple examples right there. Boom. All right, let's start with GA. So of course, first things first, what do I want to do? I know you guys been watching the previous videos. You've been studying, right? So we're going to put this to the test. So again, All right, you want to identify those close aboves or belows. And for those watching for the very first time, why do we want to identify that? Because it lets you know who's in control of the market. First things first, we want to identify the trend. Are we going up? Or are we going down? Right? Once we do that now, so for example, price came up to this demand supply zone, not demand zone, supply zone. I want to wait for a bearish candle to close below a bullish candle. So as you can see here, I got a nice clean close below right there on this engulfing, this big bearish engulfing. The pullbacks, these wicks right here, if I go down to a smaller time frame, that's the retest on a smaller time frame. See? And this is where I love to use the Fibonacci tool. All right. So now that I know price is going on a downtrend, I got that sell-off on that daily time frame. I'm going to measure this leg, right? I'm going to measure this leg from this low, from this high to this low. And you see how price wicks off that 50 fib extension level? That's why I say 50%, right? I would say right around here was probably the 23. This probably got up to around the 38, but that 50. See how it wicked off there? And then once price gets there, same thing. All right, I'm waiting for a close below, which I got. So I would have gotten in on the next 1 hour candle. And there's my sell-off. I would trade basically to the zero extension, cash out, or to the extended fib levels. All right, it's that simple. All right, so how I was able to grab the buy, right? Caught the buy setup earlier this week. How were we able to do that? Again, go to the higher time frame. We saw price bounced off this daily retest, came to this demand zone. And as you can see, there was close above, right? So zoom out real quick. And then you catch the retest, the pullback on the smaller time frame. But the key level was right here, right? This was last week. So how were you able to catch? We got our close above. Perfect. Want to jump down. Remember, top-down analysis. So if I'm on the daily time frame, I want to jump down to the hours and then to the minutes for that ultimate entry, right? If I'm trading off the hours, then I go to the minutes. So top-down analysis. So if you mark up on your higher, you go to the next time frame. So if you're higher, if you want to trade on the minutes, you trade off the hours. You want to trade off the hours, you trade off the days. Okay? So after that, I'm going to go to my 1 hour. All right? So boom, right over here, clear as day. I had a change of character. And this was my retest. Now, this is where a lot of people struggle. Now, they'll normally wait for a retest to be in conjunction with the MACD, as you can see here, and then look for a buy. They'll try to coordinate it to the next POI, which is all correct. All correct. But when you add that fib extension and you measure this leg, this was the breakout leg, right? So this was the leg that caused the change of character. So I'm going to measure from this low to this high. Now my confidence goes through the roof because I know as long as price pulls back to one of these 4 fib levels, I got the 50, 618, 786, 88. So those are the levels I'm going to watch. As long as price doesn't break this low, previous low, all right, I'm going to look for a buy. I'm going to look for a buy at the 50, the 618, the 786, the 886. And as you can see, in conjunction with the MACD, right, this is bearish. It's not creating a new low. I got a close above on this bullish candle right here. Right, that was my close above. Close above. That's my confirmation, and this is my entry candle. All right, and I can place my stop loss at the next fib level or below this candle right here. And as you can see, there's my buy to the upside, about 90 pips, right? before price retraced. Okay, this is how we were able to take advantage of this GA buy. We did the same thing for GN, right? Look at this wonderful GN. Same thing, same rules, same principles apply. All right, called it out. Went on to daily, right? This is what we saw. We had a close above, right? Price came down, close above. Since we're looking for a buy, perfect. Went down to the 1 hour. All right, this was the leg. Clearly, I have my change of character over here, but my daily close was up here. But this is the leg that I want to measure when I bring out my Fib tool. So from this low to this high, and you see how price pulls back to the 50,618. Again, as long as price doesn't break this low, I'm going to look for buys. I'm going to keep looking for buys. So I got asked this question, Steve, how many times before I give up on the trade? Again, unless this low gets broken, I can get tagged out here, here, even right here. Technically, there was a close above, it gapped up, and then it came down, took me out. I'm going to keep getting back in. Of course, with proper risk management, but imagine I got in here, I lose this trade, and then I get back in after I get this close above, right above here. Look at that, guys. Clean 250 pips. You tell me, you let me know in the comments. Is it worth jumping in if I lose 1 or 2 trades because it doesn't take off exactly at the 50 or the 618? It actually wicked down to the 786 before taking off. Again, this is my previous low. As long as this leg doesn't get broken, I'm looking for a buy. This is where the Fib levels come in. Gives you that extra confirmation. So now all you have to do, wait for price to come back to these levels. All right. That's how we were able to catch that GA and GN to start our week off. Okay. Last week, we caught a wonderful sell-off on USD Swiss franc, as you can see here. Right? Giving you live examples. This is exactly what we did. I'm actually selling USD Swiss franc as we speak. All right. So what did we do? One, we hit the top, hit a major supply zone, got the close below, right? Got the close below and went down to the 1 hour, right? So this leg right here, this is my leg. This is the leg that caused the close below. So daily, close below. All right. Essentially my change of character. This is my previous high. So I want to measure this leg from this high to this low. And again, same thing. I want to sell at one of these 4 levels. As long as I don't break this high, I know my sell-off's going to come. So look, this was a perfect example. See how price came to the 50. We didn't get a close below this bullish candle. Remember, it got to be below the entire candle, including the wick. So that didn't happen. But it did happen at the 618. We got to close below. So my first entry would have been here. So first entry here. First entry, stop loss above. This dropped about 18, 19 pips. Me personally, I'm not a scalper, so I would have still been in the trade. Voila. Price would have taken me out. Right? Okay, no problem. I get in again. I look for close below. I need a bearish candle since I'm looking to sell, right? Based off this leg, based off this close below, I'm looking to sell. So I'm going to keep trying to sell. Right? Bearish candle did not close below this bullish. Bearish did not close below this bullish. Bearish, even though it wicked down, didn't close below this bullish. Didn't close. Ah, we got to close. So second entry. After this 1 hour, I would have gotten here. That's my second entry. stop loss above. And as you can see, spiked out. So I'm 0 for 2. Now, this is where most traders quit. They would have given up. They would have been like, all right, this is not working out. Screw this strategy. Screw this setup. I'm going to look for something else. Guys, patience. What's my 4 rules when it comes to trading? Knowledge, real knowledge, understanding what you're looking at. Risk management. Risk management is more important than understanding supply and demand, understanding smart money concept, understanding the MACD and Fibonacci. Risk management. That's why it's number 2. It'd be number 1, but number 1 is knowledge. You got to understand what you're doing. Risk management. Number 3, discipline. All right. Can you be disciplined in your methods? Number 4, patience. Most people are not patient. Trading is a waiting game. Warren Buffett says it. To be successful in investing, you got to learn how to be patient. So think about this. This happened on Sunday, knocked out. Then it happened again on Tuesday. So that means all day Monday, you would have just been quiet, not doing nothing. Boom, taken out again. But here, finally, after a wick on the 786, I got my close below. This is my 3rd entry. Stop loss above. And as you guys can see, voila. 160 pips. Right? Was it worth it? Let's say I would have lost 20, 30 pips here. Another 20, 30 pips here. Say 30, 30. So I'm down negative 60. But then 160. So make up for my negative 60, right? I'm still plus 100 pips. You're still up. You don't have to be 100 for 100. All right? You can lose and still come out ahead, guys. But this is how powerful it is. So exactly how this dropped, guess what? A new low's been created. So now what? I do the same thing. I measure this leg, take my fib all the way down, and then boom. Now, this is the part, like I said, because I removed the 23 and the 38, I'm going to miss out on some setups. And I'm okay with that. All right, you got to be okay with that. You can't chase after everything. But as you can see, getting a retest, I do have a POI level just short of the 50, and we're getting a nice 1-hour retest. I don't see price breaking this high. And as you can see, you're getting your sell-off. All right, this is how I utilize the Fibonacci tool. I measure the leg. After I get my close above or below on the daily, the weekly, I go down to the smaller time frames and I measure the leg. Free game, guys. And this is how we're able to capitalize on this gold buy setup. Right? Same thing. This was the gold buy. This is another gold buy right here. We're in a big uptrend. So I'm looking to buy. Right? That's the daily. It's telling me I'm in a big uptrend. I'm at all-time highs. So all I'm looking for is close aboves, which I had right here. All right. I go down to my hours and I wait for my retest. So this was the close above. All right. Let's notate it so we always know where we're at. Close above, break of structure, boom. So I'm going to measure this leg. I'm going to start from this low. Look at my MACD. That's my bottom here to the height of this. Boom. Again, there's my entry point. Right at the 618, 50% of the leg in conjunction with my MACD if I include that. So super confidence. Once I get a close above, right here, boom. So again, this would have been entry number 1 because it happened right at the 50. I would have bought here, stop loss there. Obviously, I would have lost, but then it happened again. Entry, close above, entry here, second entry, and voila. Pull back again. As you can see, another 1 hour retest did not break. Most importantly, didn't break this low of this leg or this low of this leg. Another buy. All right. So the Fibonacci tool is a great tool to utilize, guys. If you're not utilizing it, I highly suggest you do. Many traders do. I just dropped in the chat. I'm looking for buy setups on Euro USD. So now you understand why. Got my close above. We're also coming off a demand zone, right? Starting to turn. There we go. Got this close above. Go to your 1 hour. I'm going to measure this leg, this bullish leg. And as you can see, price is starting to bounce off that 50. So I've already started buying, right? As long as this low does not get broken, every time price comes to one of these fib levels, I'm looking to buy. All right. So now with the fib extension, this gives you a lot more confidence when trading. Okay. Practice, as always, back test. Let me know in the comments if you like this information, if this was helpful. Again, if you want access to the Telegram group, that's free. Description box below. If you want access to the other group, shoot me an email, guys. As you can see, people working, man. People working. James working. Pierre working. Pierre's killing it, man. Look at all 450 pips, 650 pips, 100 pips, 207 pips on EJ, 180 pips on USD peso. Pierre's killing it, and so many others are killing it too, guys. Also, you'll be getting access to my morning sessions if you want that. Iron sharpens iron. I always tell people, iron sharpens iron. If you want to get better, come rock with your boy. But that's pretty much it. That's the training for tonight. Again, comment, share, like, tell a friend to tell a friend. And I'll see you guys on the next one. Take care. Stay blessed.